Hello, everybody, and welcome to another episode of BullionStar Perspectives. My name is Ronan Manly, and today we're delighted to have with us Lawrence Lepard of Equity Management Associates. Equity Management Associates is an equity management firm which invests in public and private equity across the world, and with a special focus on monetary metals and gold miners and silver miners. Hello, Larry. How are you? Welcome.
I'm great, Ron, and thanks for having me on your program. I think for the first time, we've been friends for years and haven't ever done one of these. I'm happy to join you.
Yeah, it's been something I've been meaning to line up, so it's great that it's happening right now. So I know that you publish a quarterly letter on a macro basis about interest rates, inflation, the Fed, with a US focus. And right now, we are at a very critical position with the Fed, having raised interest rates, having paused a little bit, but with the threat that they're going to continue to raise rates. So what do you think is going to happen over the short term? And is the Fed at the endgame play that whatever they do, they've boxed themselves in now?
Yeah, that's a great question. That's the question we're all asking. None of us knows the definitive answer, particularly with respect to the timing. But the mathematics of the situation are pretty clear. And something is going to have to give. They cannot continue to raise rates the way they've been raising them to take them up higher without ultimately cratering, I should say, the financial system. In a debt-based economy where the debt level is growing faster than the GDP level, if one does not create money and or grow the monetary base or leverage within the system eventually implodes on itself. And so what we don't know is how they will do it, when they will do it. But what we do know is that they will be forced to do it, or else we will have another Great Depression. So they're staring, they're in a very bad position where they're looking at, in the one case, they have more inflation, perhaps even runaway inflation. In the other case, they keep tightening, and that ultimately leads to the economy dying. And so it's kind of like pick one. And there was an old newsletter writer named Richard Russell, who I'm sure you and many of your listeners have subscribed to. And he coined the phrase, it's so appropriate. They're in the position where they have to inflate or die.
And I remember back in around 2003 and then again in 2009, thinking that the Fed and central banks around the world, they literally were at that end game play, but then they managed to pull rabbits out of a hat again in different types of QE and different types of bank rescue plans. Do you think that they can do that again, or are they running out of tricks?
That's a great question, and I'm sure they're going to try, right? I mean, I was like you in 2008. I thought it was all over. Of course, that was a huge housing bubble. And they took it up to the sovereign debt level by going to ZIRP for a long period of time. And, we all know the other things they've done, the fiscal spending they did in 2020, et cetera. Look, they're going to continue to try to put Band-Aids on it. They did the BTFP program to solve the bank crisis, which recently occurred. And they will do other things. They will print money and not call it printing money. They will continue to manipulate markets off their balance sheet, which we think they've done in gold for years. And they will try to block the exits. I mean, in the crypto, they just did this Operation Choke Point. They tried to block the crypto, exits and prevent people from going there. So crypto as an exit or Bitcoin as an exit. Look, they no doubt have other tricks up their sleeve, and I'm prepared to see them play them. They can change the rules. They did to the big holders of nickel. The LME changed the rules last year. They could put taxes on gold. They could put taxes on Bitcoin. They could make the holding of it illegal, do a 6102. I mean, there are a lot of tools that they've got. They control the narrative and they control the government. So I think we have to be prepared to battle these things. But I think that inexorably, we are winning, and sound money is slowly but surely replacing fiat paper. But I emphasize the slowly, because I'm impatient just like everybody else.
Yeah. So this week there was actually news that the US Fed did a stress test of the 23 biggest US banks, and they all passed, which sounds a bit ludicrous. Well, not shocking that they did pass, because they probably made the test very easy. But realistically, that doesn't seem to make any sense.
There's no way. I mean, if you look at, I've read good estimates that show that at a minimum, the banking system has $600 billion of unmarked losses on their balance sheets, and arguably could be 2 or 3 trillion I've seen other estimates that show that as much as 50 or 60% of the smaller non-GSIB banks, have negative equity if their balance sheets were marked to market, based on holding long duration, low interest assets and having interest rates, their cost of capital has gone up so much. So yeah, I mean, they're just, again, this is just another government lie. I mean, the way they lie about, the unemployment numbers, the way they lie about the inflation numbers. I mean, frankly, Ronan, we can't trust any of these numbers. And that's why, honestly, as a trader and an investor, I've given up. I mean, the stock market should be going right down right now, but it's not. I mean, we're only down 9%. I mean, I consider the bubble that we had up until December of 2021, as you'll recall, people were standing in line to fight over houses. And Bitcoin was at 68,000, gold was on its way through 2,000, et cetera. I think that bubble burst in early 2022 when the war started and then Powell started increasing rates. And yet we had an enormous bubble that was 40% larger than the prior bubble by a couple of measures. And yet right now the S&P is only down 9% from its peak. Well, that's not a bubble bursting. I mean, and I think what's going on there is I think the S&P is front running the next round of money printing, which will occur. I think Powell, look, we know they said inflation was transitory until it wasn't. And then they went crazy and raised rates very quickly. And now they're going to continue to raise rates until they beat inflation. Okay. Except mathematically, we know they can't do that. And my sense is they'll pivot just like they always have. And when things start to go against them, they will quickly stop raising rates and ultimately they will cut rates and then they will ultimately return to QE. And they will do that because the alternative is worse.
So do you think that the current round of rate increases still has to take effect in an economic sense? So could there be an economic recession that hasn't yet happened? And could the recent US banking crisis that happened in February and March with SVB and Signature Bank, First Republic, could that be just the beginning as well? Because I did a short video last month about the banking crisis in the US and drew analogies to what happened in the 1980s with the savings and loan crisis and then in the banking crisis that began around 2008 and 9. And I was actually surprised at finding this, that the majority of bank failures didn't happen in the first year or second year when those banking crises hit. They happened in subsequent years. Like there was seven times more in like mid 80s compared to early 80s.
Yeah,
and 2010 and oh yeah, thanks. And then like 2011. So do you think that there could be right now the calm before the storm?
I do. I mean, I think that's, once again, the Fed is behind the curve. They don't know what they're doing. And, this reminds me of a lot of other periods. I mean, I remember when the bubble burst in 2000, it took a couple of years for it to really get going to the downside. I remember Bear Stearns funds blowing up in the summer of 2007, and then Bear Stearns failing in March of 2008. And the GFC wasn't until the fall of that year. I mean, yes, to me, these are what in my report I call rivets popping. The system is stressed. They've raised rates enormously. It's causing all kinds of problems. Witness Silicon Valley Bank, witness Credit Suisse. And, to me, those are the leading edge of the storm. There's a lot more storm coming. And they like to think they've got it under control. As we know, they're very quick to immediately create programs which solve problems. That's what the BTFP was and did. To be honest with you, I didn't think it would solve it the way it has, but people are complacent and people are willing to gamble. And so now AI is all the rage. The stock market's raging, racing higher based on 7 companies, one of which is a big AI company, NVIDIA. Yes. I mean, I think there's no doubt that we've got a lot of economic pain coming as this bubble unwinds. And the process of unwinding has only just begun, in my opinion.
So normally, people interested in gold in a historical sense would know that usually gold is the barometer of financial crisis and it's the canary in the gold mine. But gold has held up, but it hasn't really shot up as you might think it would because of the huge crises that we see in the general financial environment. And that's why I wanted to talk about gold price manipulation. I know that you subscribe to the fact that there is gold price manipulation and it can happen in various forms. One form that I am interested in personally is the fact that the whole structure of the gold price discovery is based on unallocated gold being traded by the LBA banks in London and gold futures in New York. So literally you've got unlimited supply of gold, and until that changes, the gold price can't really accurately reflect physical supply and demand. What are your views on that?
Well, I think you've characterized it quite accurately. I mean, I think it's not entirely manipulated. It's manipulated, but to the upside, because it has gone up over time. I mean, let me just say that, in spite of the most incredible tightening in history, or I should say since, Paul Volcker did it back in the 80s, the gold price has actually held up relatively well. I mean, it's, in the 1900 range, it's 6% off its all-time high of 2050 roughly. So, I mean, I think gold is looking around the corner. And if people really believe that they were going to get inflation back down and things were under control and the US wasn't acting like a third world country, the gold price would be going back to 1500 or something. And in fact, a lot of banks in Toronto are saying they expect it to go back to 1700. I don't think that's going to happen. I think it's going to go through 2000 with authority as it becomes obvious what the Fed has to do. To the manipulation, that's been going on for years. It started with Barsky and Summers' paper, on Gibson's paradox way back in the 70s and 80s, and then came, full storm when Robert Rumid became, a former gold trader with Aaron and Company, which got bought by Goldman Sachs, and he became Treasury Secretary for Bill Clinton, and Bill Clinton wanted to have a good economy, and James Carville said, "You mean to tell me the bond market's going to tell us how well we're doing?" And Rubin said, "Don't worry about that. The bond market, responds to inflation, and inflation is measured by gold, and we'll just suppress the price of gold." And so that's the time at which you saw all these countries down in all these accounts down in the Cayman Islands and the Caribbean suddenly become out of nowhere large sellers of gold. And my belief is that those were agents of the U.S. federal government acting on behalf of the U.S. federal government, because the U.S. government has, through executive orders, the ability to maintain stable markets. And they have an exchange stabilization fund, otherwise known as the Plunge Protection Team, which was set up by Greenspan in '87. And so the fact of the matter is, it's a matter of national security in the U.S. government, the U.S. federal government, to keep the gold price suppressed. And that's why, as we all know, and if you go to, Chris and Bill's site at GATA, what you'll see is that there's just enormous evidence pointing to and explaining the suppression of the gold price over the years. I mean, many people believe, and I do too, that there are probably 10 paper claims on every real ounce of gold that's traded out there. And so, what that is really just kind of a large, call it a large game of musical chairs, where a chair represents a real ounce of gold, and the people circling around all think they own gold, but they don't. And if the gold price were to reset and they were to say, "Give me my gold," the person who sold them the paper would say, "Sorry, I can't, I'm bankrupt." So yes, the gold price has been suppressed. Having said that, it's still kind of worked. I mean, it's kind of up 8% a year compounded, since 71. So it's not, if you did, I mean, I find this very interesting. I've told this other people, in 71 and the 60s, you could take a monetary aggregate, call it M1, and divide by the ounces of gold the United States held, and you'd come up near $35, which was the reference price set at Bretton Woods. Yeah. If you did that same calculation today, the price of gold should be $80,000 an ounce. If you look at all the money that's been created, all the paper money that's been created as against the gold that the U.S. holds, which is supposed to be the backing for that money, we need to be at an $80,000 an ounce gold price. So to say that, the money has been separated from gold is kind of an understatement. And to say that the gold price has been suppressed is kind of an understatement. I mean, and of course, a lot of the Bitcoin guys say, yeah, here's the point, gold has failed. And, yes, it has, and yet it's still gone up 8% a year. So it hasn't completely failed. It's failed maybe against other things. So does that answer your question?
Yeah, definitely. That's a really thorough answer, and some very interesting information I hadn't heard before about the Summers and Rubin and the Cayman Islands. But if you think about the physical supply of gold and the fact that the price isn't accurately reflecting that physical supply, why do you think that bodies such as the World Gold Council, which represent all the big miners, and then Bloomberg and Reuters, why do you think they never go there and investigating and highlighting this to Wall Street? Is it because it is such a huge national security issue that the World Gold Council and Reuters, Bloomberg know that they can't really go there?
I think it really is. I mean, I think rather sadly, you've got to decide. I mean, this is, sound money is at the core of any sound society. And I think there is an accepted narrative, on a lot of things that the U.S. government has created. And if you decide you want to stray from that narrative, you suddenly become shunned and outside of society and no access to Wall Street. And, you become a conspiracy theorist. I mean, I've been labeled a conspiracy theorist. I mean, I think, I don't think they're theories. I think they're, a lot of conspiracy theories have turned into conspiracy facts.
Exactly.
And so So as a result, but I think the World Gold Council, look, I mean, they want to be listened to by the mainstream media. They want to be listened to by the U.S. government. They want to be thought of as being credible. If they support what, all those other parties have labeled as a conspiracy theory, they lose some of that. Even some of the large gold mining companies, I mean, I think in their hearts, they know we're right, but they don't want to go there. They sell bonds and stocks through Wall Street. Newmont's a member of the S&P 500. I mean, they want to be considered within the boundaries of acceptable society. Now, I think those boundaries are changing, and I think more and more people are coming to see that what we've been saying all along is correct. So, I think they're going to be lost and swept up in the tide of history if they don't get on the right side of it. One of the things I think is beautiful that's going on in the world right now is that the internet and Bitcoin, on top of that, are really disrupting the entire system. I mean, my son told me the other night that Tucker Carlson, who left, a major
Fox
news organization, Fox had 95 million viewers on YouTube. I mean, this is unprecedented. I mean, the existing power structure is being slowly but surely dismantled by the internet and alternative media. I mean, Joe Rogan has more listeners than CNN, right? And so as more and more people come to understand what you and I know and what reality is and what the truth is, the world is going to change. I mean, it's as simple as that.
Yeah, sometimes when I talk to Chris Powell and Bill from GATA, they say that privately lots of Wall Street executives and mining executives agree with what they say, but they can't say it in public.
Exactly right.
So it's literally a case of convincing those people, once there would be a critical mass, to go over to the other side and to really admit what they know in their hearts is true. But they can't do it
right.
for
And
their jobs, maybe.
let's give a big shout out to Keith Neumeyer of First Majestic.
Yes.
Who was one of the few large mining executives who completely understands what we're talking about, tries to hold silver on his balance sheet as much as he can, completely believes in his product and understands it. I mean, he's an exception to the large mass of big companies that maybe understand it but aren't willing to go there.
Staying with sound money as we're on the topic, I know that you have a soft spot for Bitcoin and more so Bitcoin than crypto in general. But what do you think is the price outlook for Bitcoin at the moment, given that it had gone down from its peak of 68,000 in early November 2021 to around 15, but has since doubled again as we hit midpoint of the year?
We all know it's very volatile.
Yeah.
Look, there are a lot of models that are used to describe it. I mean, one of the things that people who aren't aware of Bitcoin should do is they should understand the halving model, the 4-year halving cycle. The supply right now, the issuance of Bitcoin is similar to the issuance of gold. In other words, the supply is growing at roughly 1.8% a year. Every 4 years, that gets cut. That halving cycle kicks in and the amount that's produced gets cut in half. The miners get half the amount of reward. And so that's coming up next year, April roughly. And so using the halving cycle model, I kind of see, we end this year at, I don't know, 50,000, call it. We end maybe next year at 100 as the next upcycle begins. And the next upswing takes us to $200,000 or $300,000 a coin. That's kind of my rough estimate. And then we have another correction as we wait to go into the next halving cycle. And, one of the things you've noticed if you look at it historically, and really that's all we have to judge it on is the historical pattern, is that we keep getting higher highs and higher lows. And that's the definition of a bull market. And so, we were at 68, we came down to 15. The one before that, we were at 17. We came down to 3.5. So that's a higher high and it's a higher low. And I ultimately see 10 years out, I think it's $1 million plus a coin. I mean, there are 21 million coins. And as you and I talked about before the show, some of them have been lost. They're not all there. They've mined 19 million plus of them. And what are there, 40,000 millionaires in the world was the last number I heard. I mean, every millionaire in the world couldn't even hold one coin. I mean, I think there'll come a day when holding one coin will be a big deal. And you can buy one coin today as we speak for $30,000. Not a trivial amount of money, but equal to a cheap car. I personally believe that, as we discussed earlier, the important thing that a lot of people I think are missing here is that it's money. Yes, it's arguably money. It's only money if we all accept it. And that's an important fact. What really happened here is somebody invented digital scarcity. Never existed before. You could copy anything. There was no digital scarcity. And so what does that mean? It means, well, we've got a provable amount of something that's digitally scarce, 21 million. And to me, that's like, it's, you know, at some point somebody invented the wheel, and they invented fire, and they invented a printing press, they invented an internal combustion engine, they invented electricity, they invented airplane flight. All these different things got invented and then led to the world changed. And so we now have true digital scarcity. And what's going on is people are recognizing that digital scarcity allows them for the first time in their life to actually purchase a form of money that is deflationary, because there's a fixed amount of it. And so, you know, you buy a Bitcoin, you know there will never be more than 21 million Bitcoin. That's an incredibly powerful thing. And I think a lot of people haven't taken the time to understand that. In commodity land, I mean, this is the other thing. Bitcoin has been deemed to be a commodity by the SEC. And in commodity land, you know, there's no commodity in the world that if you take the price and shove it up 500%, you won't get more of it. I mean, if oil goes to $500 a barrel, we're going to be drilling everywhere.
Yeah.
You know, if corn goes to, you know, $70 a bushel, we're going to grow a lot of corn. I mean, any commodity, the supply responds to the price move. Here you have a commodity where the supply is mathematically programmed. And it doesn't matter if Bitcoin goes to 100,000 or a million, there's not going to be any more Bitcoin. And I think that once that sinks in at a larger level, it's going to be just kind of amazing. And so, as you and I didn't discuss before, but I think it's an important thing. I mean, here's BlackRock, you know, a company that 3 years ago was shitting all over Bitcoin, thought it wasn't important, now realizing that, hey, we better get with the program, and they're trying to get an ETF. And of course, you know, they're very well connected and very friendly with the government. My sense is they will probably get approved for that ETF, and then the whole new class of investors will be able to buy Bitcoin. I mean, there's $400 trillion of investable assets in the world in terms of stocks, bonds, cash, and the Bitcoin market value today is less than 600
or half a trillion.
Half a trillion, right? So 400, half a trillion. I'm not suggesting that half a trillion is going to take the 400. No, it's, you know, it could, but that's a long way out. But it doesn't take a lot of movement of people saying, hey, you know what? Here's a thing, a digital entry that cannot be created at will by the government. I like that. In the same way that other people have said, you know, gold. I like gold, and the reason I like gold is that government can't print it. And the one thing you and I both know, and most of the listeners listening to this probably also know, is that, you know, if the government can print, they're going to.
Yeah, that's what they're there for. That's
what they're there for. They're the lender of last resort. And when the system gets in extremis, they will print. Now, it's hard right now for all of us because we're in one of those periods where they're pretending to be really fiscal, you know, they're pretending to be really responsible. Oh, we're going to slay inflation, we're going to raise interest. But folks, it's all just to pretend. It's the same way they pretended that inflation was transitory, and they were dead ass wrong. And so they're going to be dead ass wrong about this too.
When you mentioned BlackRock, it got me thinking about a question I was going to ask you. When FTX imploded, and then subsequently you've got the SEC filing claims against Coinbase and Binance exchanges, and then you could also maybe add in the fact that the crypto-friendly banks, Silvergate, SVB, were the ones that got pulled or that imploded. Do you think that there was a concerted effort by the US establishment to take down crypto just to make it an unattractive asset class, or because they want their friends on Wall Street to have a lower entry point?
Yeah, that's a great question. Kind of all of the above. I mean, I think there are a lot of motivations, a lot of things going on here. I mean, some people say that the government backed FTX in order to let Sam create a big fraud so that it could hurt crypto. I mean, that's a conspiracy theory that I don't know if it's true. I'm not sure I can really buy that. I think crypto came as a surprise to all of them in the government. I really don't think they were paying much attention to it or thinking about it. I think they did a terrible job of regulating it and getting on top of it. I mean, most of us in the industry knew that SBF was a total fraud. We knew it, and we were screaming from the rooftops on Twitter and other places, this thing is bad, stay away. So whether or not, you know, I actually attribute it more to stupidity on the part of government that they didn't go after him earlier. But then let's say, okay, so that collapses. Well, suddenly, in my view, Gary Gensler has a lot of egg on his face. You're supposed to be regulating the securities markets, and yet here you let this kid, you know, rip off, you know, millions of investors for billions of dollars. You know, what the hell, SEC? I mean, this is what you're in business to prevent. And so,
yeah,
you know, the horse was now out of the barn. Well, he quickly went rushing to close the barn doors, and then of course he got a lot of help from you know, the Elizabeth Warrens of the world who created the anti-crypto army, right? Who decided to label this thing as evil, and so they did Operation Choke Point. And even Barney Frank, who was the author of Dodd-Frank, said that, you know, the signature bank, you know, that was basically an assassination. And so they realized. I mean, let me say this, Ronan. When Bitcoin in 2019 to 2021, when Bitcoin went from 10,000 to 50,000, I got to tell you, alarm bells were going off in every major central bank in the world. Like, holy shit.
Yeah, I remember some of the comments from the bankers.
Right. Like, holy shit, this is really a problem. I mean, this is gold on steroids. And gosh, we've managed to get the gold thing under control. And so we think we've got everybody thinking there's no inflation because the gold price isn't going up. But look at this thing. I mean, all these guys are Austrian economists, and they're saying this is sound money, and it's really working. I mean, we got a problem here, guys. And by the way, I mean, I think that's when they opened the futures market. Well, they'd opened actually earlier, but I guess my point is that they basically started thinking to themselves, how are we going to get this under control? And the actions, this choke point stuff, that's part of how they think they're going to get it under control.
By shutting off the on-off ramps between fiat and crypto.
Exactly. And I think there's more to come. I mean, I think they might tax it. I think they might try and make us report our addresses. I mean, in the US, you're probably not familiar with this. You don't live here. You have to tick off a box on your tax return that tells you, they ask you, did you deal in cryptocurrencies in the past year? Tick this box. So they're already snooping around, right?
But are they able to cross-reference it with trading accounts and customer names?
Yeah, I mean, that's probably why they want all the additional IRS agents, right?
So here's a connected conspiracy theory, if you will, about retail central bank digital currencies, CBDCs. Some people subscribe to the theory that, say, the US government or the NSA allowed private crypto to flourish just to get people used to the idea of a digital currency, but that really their motive is to introduce a Fed dollar, digital dollar, and that when they do that, they maybe would outlaw private cryptos, but people would be used to the idea by that stage.
Yeah, I mean, I've heard that theory, and I don't strongly disagree with it. I'm not sure it completely explains what happened. I think the crypto thing just kind of emerged, and they were all caught by surprise. Let's move to the CBDC. I mean, that's a very evil thing, and I don't think there's any doubt that they're trying to build that perhaps as an alternative to Bitcoin and as an alternative to the cryptos, and as a way of controlling the population and controlling what we spend our money on, and, you know, an early measure of social credit scores and so on and so forth. And look, there is no doubt that the people who have the privilege of being in the government, who hold all that power because they can print money, that they are taking actions to try to control the rest of us. And the CBDC is one of those actions. I mean, I just saw it on Twitter this morning. I retweeted it. I mean, Nigel Farage, who's an Austrian sound money guy in England, just had all his bank accounts frozen.
Oh, really? I didn't see that.
Yeah, I mean, and it's been known. I mean, they went, you know, Peter Schiff, who's a gold guy down in Puerto Rico. I mean, I'm not a fan because he hates Bitcoin, but he is a gold guy. He's a sound money guy.
His son likes Bitcoin.
His son likes, I know. But he is a sound money guy, and for that I respect him. And, you know, he had a bank, and they targeted it, and they went after him and got him on some small technicalities, basically made him shut the bank down. So the point is that the people in power will do everything they can to preserve their privilege, absolutely everything. And we have to be prepared for this. And I learned that the hard way. I was short the financial stocks in the fall of 2008, and they banned there was an executive order. They banned short selling financials like on September 20, roughly, of 2008. I mean, I had enormous gains because the GFC was happening. I would have had even bigger gains. And, you know, because I was forced to cover into a market where everyone else was forced to cover, you couldn't short them. Those stocks went up. You know, I gave all my gains back. I ended up the year down 6% in a year where I should have been up over 100%. So, and that was purely and simply changing the rules to protect their system, very much like the London Metals Exchange did with a guy who had cornered the nickel market earlier. I guess it was late last year, right?
Yeah.
I mean, we have to assume that they're going to continue to do this shit, right? The good news is Bitcoin doesn't give a shit. We've got a technological tool that they can't beat, and that drives them nuts, but it's a fact.
It's like that meme of moving the goalposts, literally. A bunch of guys pick up the goals and move it across to the other side of the line.
Absolutely. I mean, this is, you know, and all of these things, let's go to a bigger, broader lens. All of these things we are watching the money die. They've broken the money. We are watching a complete financial failure of the monetary system. That's what this fourth turning is all about. And so, everybody, as we said earlier, everybody's kind of looking at a different piece of the elephant, and you got the CBDC piece, you got the Bitcoin piece, you got the crypto. I mean, there are lots of different pieces, but it's all the same elephant. The U.S. is starting to look like a third world country, and the dollar was the reserve currency, and it's reflected that.
Well, talking about overstepping your authorizations and third world countries, the Western sanctions led by the US and the EU against Russia and actually confiscating their assets and confiscating all the FX assets, but not the gold, presumably not the gold because it's located in Russia. That has had a huge set of knock-on effects where central banks around the world have sat up and taken notice, ones that aren't aligned with the G7, and they're going, listen, what has happened right now is so extreme that they have to really make contingency plans, and they're buying gold. I wrote that there was a chapter in Gold We Trust report for Incrementum for Ronnie about the showdown between East and West. So what's your view on how those sanctions against Russia have literally triggered central banks around the world to sit up and say?
Absolutely. I mean, from a long-term strategic point of view, that was the U.S. admitting basically that the system is broken and rule of law. I mean, look, say whatever you will about Russia, and I'm not a Russia fan. The fact of the matter is that in general, the belief was that when you had assets, they were your assets, that you couldn't just go grab them. And the fact that the U.S. unilaterally decided to grab $600 billion worth of Russian assets and go after the oligarchs in Russia as a result of the war that they started, that sent a shockwave around the world, and everybody who has U.S. dollars as part of their reserves says to themselves, if I do something the U.S. doesn't like, they can take my money. And we'd already seen this. I mean, they did, they threw Iran out of SWIFT. They did things with Libya when it talked about going to a gold standard. I mean, the fact of the matter is that part of the money failing, this has told everybody, hey, you're on your own. You got to decide where you want to keep your excess cash and your reserve assets. And this is why we see the BRICS currency being set up. That's going to be talked about, in South Africa later this summer. And I don't know how much traction they'll get with that. But the point is, as you mentioned, Ronnie's report, and Ronnie's report shows that in Q4 of last year, central banks bought more gold than they had ever bought in their history. And so to me, that's a market indicator of dogs eating that food. Okay, fine. You guys want to threaten us with these currency sanctions? We'll get the universal currency that we know you can't print, and that's gold, right?
Yeah, exactly. Yeah. 2022 was a record year, and even since then, in the beginning of 2023, Russia re-announced monthly announcements about their gold reserves. I think it was actually back in November, China had started again, and then even Singapore bought a huge amount of gold in the first quarter. So you've got these very important countries now buying gold. The second half of this year is going to be interesting, especially seeing that the BRICS may be on a path to expansion sometime after the conference in August. I was going to wrap up soon, but I wanted to ask you about your company, Equity Management Associates. I know that you're an investment manager who invests in equities, both public and private, with a focus on gold and silver miners. Could you give us a little bit of a background about the strategy, the investment philosophy, the asset allocation, and how people can actually become clients of your
Yeah,
fund?
absolutely. I appreciate the plug. Basically, we run what we consider to be a sound money fund, and the notion is we're trying to protect our investors against monetary debasement, and so we have a lot of optionality to higher gold and silver prices and higher Bitcoin prices. We're about 85% gold and silver miners and about 15% Bitcoin related things. Half of that 15% actually being the coins that we hold in cold storage, and the other half being small Bitcoin related companies that we think could become major companies like Strike and Custodia. Over on the gold mining and side and space, it's incredible how cheap these things are right now because, as we know, Powell is tightening and everyone thinks you don't need gold if they're going to get inflation under control. We don't believe they will get inflation under control. We think they've lost control of it. It's only going to be much higher in the years ahead, and gold prices will be much higher in the years ahead. And so we balance that 85% that's in that gold and silver mining bucket. We balance that between what we consider to be the lowest risk bucket, which is growing producers with positive cash flow. They've got a number of ways to win, but one, they can grow their production. Two, they can have higher metals prices, which will increase their margins. And some of our good companies have all-in sustaining costs of $1,100. Gold at $1,900 gives them an $800 profit. Obviously, gold at $3,000 would give them an even bigger profit, although the cost would certainly go up. And then the third way they can increase in value is their multiples can expand. And honestly, we have several companies which are trading at less than 5 times cash flow. And if you want to take a look at the bigger companies in the U.S. stock market, most of them trade at between 10 and 20 times cash flow. And so if gold mining ever becomes popular again, that multiple of cash flow can expand. So growing production, more cash flow from higher metal prices, expanding multiple on the cash flow. We think the upside in these things could be explosive, if and when we get out of this, what we call this a deflationary impulse. Gold broke out from 1365, which is kind of where it was in 2017, and it smelled what was coming, and it ran up to as high as 2000, over the kind of the 2018, 2019, 2020 period. And our fund went berserk. We had an up 97% year and up 122% year. Don't get too excited though, because we gave a lot of that back in the last few years, but that also represents a buying opportunity. But again, when these things run, we think that they are explosive to the upside. And our view is that we are going to take out that 2050 high in gold. And we are going to take out that $30 to $35 level in silver. And we're going to see record high prices in both of those. And these mining stocks, many cases, these have durations of 10, 15 years or more of production. And so you're looking at a flow of metal for the next 10 or 15 years of a positive cash flow. So there's a lot of upside there. We are adding new investors, not rapidly. We have a limited number of spaces because of the way the rules work and what the SEC tells us. Sadly, we can't take accounts below 200,000 US. We'd like to be able to. We've thought about creating some different ways of doing that, but it's these goddamn rules, that they've set up. Yeah. But if you're interested, just reach out to us through our website, which is EMA2. If you go to our website, there's a free thing you can subscribe to there, which puts you on our mailing list. We will never spam you. But when we do write reports, which we write a couple a quarter, we send those reports to that mailing list, and they're free. And they're basically just macro overviews of what we see going on in the world in terms of, precious metals and Bitcoin. So I'm very active on Twitter, probably too active. My wife says I'm too active. But I'm mad about what the central banks have done to us. They've created enormous pain, enormous inflation, a big boom bust cycle, and they've broken the money. And sadly, this is going to be a lot more pain for some until we get this whole situation fixed. But what I'm trying to do, and what I'm trying to do for my investors, and what I try and do on Twitter, is to warn people to tilt their investments toward investments in sound money and away from bonds and away from the stock market, which I think is very overvalued. And to spread the word on this stuff, because the way we're going to fix this system is to return the money back to a sound basis. If we continue with the system as it is, we're going to continue to have these boom bust cycles, and inflation is going to eat us all alive. So, to me, this is an important undertaking for really all of us. You got to vote with your feet, but also spread the word is kind of how I view it.
Now, that's great, Larry. You're one of the first person that I look at Twitter in the morning at your tweets. And what I'll do is we'll put your Twitter handle in the information.
Yeah, it's just my name. And by the way, beware of fakes. I will never DM you. I will never ask you how your trade is going. Sadly, the FBI contacted me. A poor woman, got sucked in by a fake Larry, and I don't know. I think she sent him some money. Oh, it's horrible. It was so sad. Make sure. I do have a blue check mark. There should be 140,000 followers. If you get something from me and it looks like it's my picture, which they rip off, click on it and make sure it's really me. If not, please report it and block it. Sadly, there's a lot of that bullshit on Twitter.
Yeah, hopefully they're getting that under control. And maybe it's actually an accolade to be impersonated in some ways.
It is, but it's not. I was so heartbroken that this woman got sucked in by one of these things. Oh, God.
Oh, it sounds awful.
Elon really, I've been told that it wouldn't be that hard for them to fix this shit, and yet they haven't. I don't know why not.
Well, I'm going to start off a new account on Twitter in the next few weeks. So that's not a plug or anything, but I'm going to be tweeting under both BullionStar and under my own name.
Oh, that's fantastic. I look forward to following that and hearing your own thoughts.
Okay, great. So, Larry, it's been amazing talking. Like, we've had a great discussion, and the topics have spanned everything, and it's been very insightful for me, and I think all the audience will love it also.
Well, I
So,
hope
thank
so.
you very much.
I hope so. I mean, it's obviously, I'd say to everybody listening out there, it's been a rough ride, but hang on, our time is coming. We're not wrong about this. These guys are screwed.
Yeah, it's just a
We're
matter
gonna,
of time.
yeah, we're gonna win. It's just a matter of time. I mean, and if you're impatient, I hear you. I am too. It's been hard. It's been really hard. But buy this stuff and sit tight. I think a couple of years from now, we'll all be glad we did.
We'll all be celebrating.
Yeah, hopefully.
Okay, so thanks again for your time. This is a great
Thank
discussion.
you, Ron. Great talking with you.
Thank you.